Welcome to TheoTrade. This is Don Kaufman. Here we are, February 1st, 2018, doing the Theo Night video just about 40 minutes after the cash close. Now, I waited until after the cash close because there's all kinds of earnings out tonight from the likes of Apple, of course, Google, Amazon, and I know that happens to be kind of the focal point of a lot of traders, a lot of investors alike. However, and by the way, rightfully so here, right? There's about $2.5 trillion of market cap. Nevertheless, okay, my focus happens to be on none other than the bonds, which are just getting at this point downright scary. So what you happen to be looking at is a chart of the ZB. Now, not everybody necessarily trades bonds, right? But you can take a look from kind of one of the more recent highs, which is kind of mid-December, ultimately to right now. The bonds have traded about 154 and 16 ticks. Now, if you don't read ticks, all right, there's 32 ticks to a 1-point move. So when I say 154 and 16 ticks, I'm saying 154 and a half. The bonds have traded from 154 and a half basically to 146. Now, what is that? Consequently, hey, what does that mean? Great, the bonds are selling off over there. What it really translates to, whether you look at bonds or whether you look at notes, and some people also have questions between bonds and notes. Well, the bond is a 30-year U.S. Treasury bond future. Okay, the note happens to be the 10-year U.S. Treasury note. Why did one called the note and one called the bond? Just has to do with duration. So the notes are also getting absolutely clobbered in today's marketplace. And again, consequently, it's been going on now for, well, quite some time. However, what is the impact to you? And why am I saying that, all right, bonds are just getting downright scary right now? Because in effect, it has everything to do with the interest rates. And this is the TNX, and the TNX is the 10-year Treasury Index. It's exploding to the upside. And for those of you, again, if you've never read this symbol here, it's the TNX 10-year Treasury Index. And again, if you're not familiar with it, this represents, instead of 27, it's really about 2.7, okay, 8%. We are getting incredibly close, okay, to this 2.8%. The 2.8%, when I say incredibly close, tomorrow morning there's a jobs number coming out. If the job number is good, all right, that could only take interest rates possibly even higher. But just on tomorrow's news, we could easily clip into this 2.8%. And that is one of these key thresholds that everybody on the street is talking about. There's two real key thresholds in here. One of them has to be 2.8%, which lots of bond traders are talking about. But a big psychological level is undoubtedly the 3% level. However, we've exploded from literally 2.4% to 2.8%. And that might not sound like a lot, but as the interest rates explode, everything, okay, that we do in Main Street and on Wall Street is influenced by these interest rates. Everything from student loan debt to credit card debt to car loan debt to your mortgages over there. People, this is the 10-year. This thing keeps on this trajectory. And what I say it gets scary is, how quick can this stall out the economy? Now, there's a couple of factors that are really in play right now, and this is the reason I say that the bond markets are kind of getting scary. So if the bond markets continue to sell off, interest rates are going up. And again, everybody believes that that is spectacular for the financials, right? Interest rates going up give the financials a little bit more, quote unquote, breathing room to be able to make money. Because, well, let's say if you're Bank of America and you have $1 trillion of client capital sitting in bank accounts, okay? Well, as the interest rates go up, they can yield a little bit more on your money. So they get $1 trillion. Instead of making next to nothing on the $1 trillion, all right, they're going to be making, 0.5% and upwards on that $1 trillion, which I have to tell you, okay, having come from the brokerage and banking business myself, that is not half bad if you have close to $1 trillion under assets under management. With that, so the financials have been exploding to the upside because the interest rates are exploding to the upside. But really what it comes down to, okay, is the marketplace will look at interest rates going up quite readily as a positive for the financials. If the interest rates explode to the upside, it'll eventually snap the back of the financials. That is what we have to be very, very careful of. And I want to bring this up because today you can see some of the volatility inside of the financials, which ultimately ended up closing higher. But after having some wild and steep kind of erratic declines before, again, eventually guiding a little bit higher over here. This, people, is something you need to keep an incredibly close eye on in the days to come. This may not happen overnight, but mark my words, those bonds continue this kind of velocity of a down move, and you will snap the back of the financials. And there's not going to be a whole lot of question to it. Well, what is it going to look like? It's going to look like an extraordinary move down ultimately in one day, where the XLF, when I say snaps, it'll move like a full $1 in a day. And this right over here is just over $1 move, the little candle I just drew on the screen, just to give you an idea of this is not going to be, a quiet move. The other aspect that you have to think of, here we have the S&Ps down 7. Okay. Now, the S&Ps are down 7 simply because technology got beaten up a little bit today. And they continue to slip a little, and we'll come back to that here in a moment with some of the earnings. But you have to recognize the financials were up 1%. Can you imagine a day where tech is getting beaten up a little bit and the financials snap? And that, okay, is where you really have to, again, pay attention, because if the financials do snap and start to head lower as interest rates are exploding higher, you're going to have days in the S&Ps that they're going to get decimated. Right now, the S&Ps, these things are holding extraordinarily tough given really adverse conditions this week. And they're holding tough. And again, the S&Ps, lo and behold, okay, have just drifted a little bit down. This isn't any real volatility yet. And you need to put some perspective on that as either a trader or an investor. People are getting a little bit nervous now. But come on, how nervous can you get when the financials are up like 1%? The S&Ps can sell off, but they can't sell off big. So long as you have the financials, they got their back. Because you have to remember, the financials are arguably, okay, right there with technology in terms of the largest sectors out there. And again, the financials, not enough people are really putting the weight into them. They're what held up the entire marketplace today as the Nasdaq slipped down, again, about 0.8%. Now, with all that being said, what does this come down to? Well, tomorrow morning, you've got a jobs number coming out, and I'll give you a little perspective. The jobs number, it absolutely matters. And to kind of give you an orientation this week, here we are with expected move for the week. And I'm just going to box this in really quickly. There's expected move for the week. So we're expecting over a $30 move this week. Well, guess what? Right now, where we sit, okay, this is ultimately where the week began, right here in the middle, where we sit, we are outside the expected move. Okay, specifically, we're at 28, all right, 22. So how far outside the expected move we are? Well, the bottom of the expected move happens to be 28.40, which gives us we're just about $18 below the expected move. Okay, why am I bringing that up? Because now go look at the SPX with exactly 1 day, to expiration. Just take a look at the SPX expiration. How ironic that the expected move in tomorrow, it's $19. So, this is not stick a fork in it. It's not done. Either we're coming right back into the expected move or we're going to 2,800 on the button. And that's what you really want to look for inside of tomorrow's trade. So we're going to have a 20-point swing. It does appear in the marketplace. And, count nothing out at this point. I'm going to tell you why I count nothing out. The jobs number, again, is going to influence the bonds. And that ultimately could be what breaks the back of the financials. Now, looking at some of the earnings. Okay, we talked about Boeing a lot here at TheoTrade. We talked a tremendous amount about Facebook. We looked at Microsoft, and each one of the products we have talked extensively, and I'll bring up Microsoft for just a second because here's something I actually brought up on the video the other night. We talked extensively about how the volatilities in these products, and Microsoft obviously already released, traded a full day. It released yesterday. But we talked about how the volatility in these products were really sky high. In fact, the volatility was the highest point that it had been really any point since early 2016. So what did we say? Sell premium. Well, guess what? Microsoft, if you sold premium in it, it's a winner. If you looked at Boeing over there, even Boeing, which had a fairly wild move, you did well in it. Okay. Continuing on over here, what else do we have? Facebook. Facebook was supposed to have a $10 expected move, right? Its volatility was elevated. Facebook only moved $6. It worked. Now, let's look at some of the earnings today. So again, we just went through Facebook over here. We've been through Microsoft. We went through Boeing, and we've been putting on, a number of just iron condors. There's not a tremendous amount of thought going behind many of these trades. And we actually displayed a number of trades the other day on the video. But right here, ultimately, is the iron condor. And you can see the iron condor is up roughly 95% had you actually placed this particular trade. Now, let's get to the earnings that came out after the bell. Of course, the big one, the one everybody's talking about, happens to be Apple. Apple beat the street, in terms of the earnings per share, but they're guiding for next quarter lower. You know what that really means to me? It means we're going to have to wait for the conference call. I know. That's not exactly what people want to hear, but here's Apple in the after hours. Now, again, Apple was poised to move as much as $7. Where is it in the after hours? It's down like $1, maybe. Again, we'll see what happens. Here's the conference call coming up. We'll see what happens in the conference call because things could get quite entertaining. But it does appear at this point that selling options premium was the way, in fact, to go there too. Because, again, Apple elevated in terms of implied volatility. Now, cruising on over to Google. What do we have inside of Google? Google came out, closed the day at 81. Right now is trading at about 60, all right, between 58 and 59. There we go, 60. So what did we have? We had a $50 expected move, and this is why people expected move. It matters. The market said it was going to move $50. What did it move right now? Well, so far it's only down about $20. Okay, it's only down about $20, and it's interesting because Google, right when the numbers came out, this thing dropped massively. Okay, I mean literally massive by massive, getting all the way down to like 1100. That's an 80-point move, and then just bounce back up. Now they're in the midst of the conference call over here, which again can always create a little bit of volatility moving forward. But lo and behold, once again, it appears that selling premium has worked in what is ultimately a higher volatility. Now, Amazon. So when it comes to Amazon, this trade today, I talked a lot about selling premium in Amazon, but this trade today, there's no other way to describe it other than Mr. Toad's wild ride. The stock sold off big, $61. What did it do in the after hours? It's exploding higher. By what amount? Well, it closed basically at $13.90. Here right now, we're trading just about $90 higher. The point that I want to make in Amazon, look at the expected move is right around $80. It wouldn't surprise me just to see the stock move, all right to the edge of the expected move. It depends, did this thing make money if you sold premium? The answer is maybe. It depends when on the day you actually sold the premium. So we'll look tomorrow because, again, we actually built an iron condor in here today at TheoTrade. We built a number of trades, and one of the iron condors, we built two different iron condors, one a $10 wide iron condor, the other one was a $5 wide iron condor. Both of the iron condors that I built, are making money at this point. Not making a little bit of money. They're going to make a lot of money because take a look at some of the strikes. I'm all the way to the 1550s, and we're almost 100 points away from that. So again, selling premium appears to be working right now around the earnings announcements. Again, I caution you. The bonds, they're just looking dire right now. They're looking scary. The dollar is selling off along with the bond market. Look for the financials. The financials are the key to holding the S&Ps together. Thanks, everybody, again for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.